Hi, this is Lara with your end of the week video analysis for the US oil market for the trading week ending 1st of June. It looks like oil started a deeper and longer lasting consolidation. The target will be about 61.12 and I'll be expecting it to last in total maybe a Fibonacci 13 or 21 weeks in total, and it should remain above 55.24. It's a consolidation, so don't expect it to move in a straight line. It should have big swings from the resistance to support and back again. Once we can identify where resistance and support are, then we can use a swing trading system to trade those big swings within it, because it's going to be a multi-month correction. I'm going to do classic technical analysis first this week for oil to show you why I am expecting we have had a decent sized trend change. So at the monthly chart level, we can now make some conclusions about the month of May now that it's complete. This long upper wick for May is very bearish. The month of May has a balance of volume, which was down, and the candlestick has closed red, even though technically it's an upward month with a higher high and a higher low. With a balance of volume during the month to the downside, that downward volume during the month has support. That downward movement during the month has support from volume, and so I'm interpreting that volume bar as bearish. But for the bigger picture for oil, we still have this very strong bullish divergence between price and on-balance volume. Here, on-balance volume has made a new high above this prior swing high, which is back in, I think, June or July 2014. But price has not yet made a corresponding new high. I read on-balance volume as a leading indicator. Where it leads, price may follow. This is a very, very bullish signal from on-balance volume, and so I do expect that the larger trend does remain up. It looks very likely that that price will follow on-balance volume and make new highs above this prior swing high here on the monthly chart, so that's very bullish. But don't expect it to move in a straight line on the way up, because that's just not how trends behave. There are pullbacks and consolidations along the way, and the bearishness at this stage from this monthly candlestick tells us to expect it's quite likely that we're going to see a time-consuming pullback or consolidation about this point. Something like this or this, it looks like, is about to unfold about here. RSI is still not overbought, so there is still room for price to rise in this upward trend, and MACD is still full bore bullish at the monthly chart level. Those are lagging indicators though. What about the shorter term picture at the daily chart level? Prices moved below the mid-term Fibonacci 55-day moving average. The longer-term average does still remain positively sloped, and so, until proven otherwise, we should expect that the upward trend does still remain intact. The upward trend, however, did reach extreme, but the problem with ADX for oil is this can reach extreme and it can get very, very extreme. Extreme is when the ADX line is above both directional lines and or at 35 or above. Very extreme is when ADX is above the directional lines and above 35 and reaches up into the 40s, and it can remain there for quite some time. Back here there was a very extreme upward trend. And so this is hopeless as a timing tool for telling us when a trend is going to end. At this stage, though, it is declining, telling us that we may have had the end to the prior upward trend at this stage. We had a bearish signal from on-balance volume. On-balance volume does remain fairly bearish at the daily chart level, so that also supports the idea that we may be having a deeper pullback or a more time-consuming consolidation. Stochastics is oversold, but it can remain extremely oversold or overbought for upward trends. For downward trends, it can remain extremely oversold for quite a reasonable amount of time. Only when it's been oversold for a reasonable amount of time and then exhibits preferably double or sometimes triple bullish divergence with price would it be more useful in telling us that downward movement may then be over. As price is falling now, Bollinger Bands are starting to widen. Bollinger Bands will commonly widen with a trend and contract or remain steady during a consolidation. So at the daily chart level, it looks like we're having a downward trend possibly beginning to develop in the early stages. Now, the fact that for the last couple of days volume is overall declining as price is falling is not a great cause for concern. The market can fall of its own weight. What that means is price can fall due to an absence of buyers just as much as it can due to an increasing activity from sellers. And within the short-term volume profile, it's this upward day which is weakest. These downward days are all stronger. So there is still overall more support from volume for downward movement than there is for upward. And so at this stage, there's no indication to see we have a low in place. Let us look next for support about 64.50 and below that about 62.0 and below that about the 200-day moving average. At the monthly chart level, my preferred Elliott wave count sees a huge zigzag over here and a new trend for a supercycle degree third wave beginning here, which may only subdivide as an impulse. And within that third wave, the first wave at cycle degree at this stage looks incomplete. It looks like it's unfolding as an impulse, with primary 1, 2 and primary 3 incomplete. When it's done, we'll have a big consolidation for primary 4 and a final wave up for primary 5 to complete an impulse for cycle wave 1. Within primary wave 3, it may only subdivide as an impulse. I expect now we have intermediate waves 1, 2 and 3 over at the last high, and so now looking for an intermediate degree fourth wave to unfold. Let's take a look at this at the weekly chart level, where the end of supercycle 2 is this point down here. So here we have primary 1, 2 and primary 3 incomplete. The target is for it to reach 2.618, the length of primary 1 at 106.25. Primary 3 unfolding as an impulse with intermediate waves 1, 2 and 3 now looks to be complete at the last high. It does not exhibit a Fibonacci ratio to intermediate wave 1. It is a little bit longer than 1.618, the length of wave 1. Within an impulse, the actionary waves of 1 and 3 and 5 for oil don't always exhibit Fibonacci ratios to each other. It's somewhat common for 2 out of those 3 to exhibit a ratio, and fairly uncommon actually for them to all exhibit ratios to each other. And so there's no concern whatsoever for the wave count that intermediate 3 does not exhibit a Fibonacci ratio to intermediate wave 1. It's a good thing though. It's for the wave count, that is, that it's longer than 1.618, the length of intermediate 1. Intermediate 3 subdivides really nicely as an impulse, 1, 2, 3, 4, 5, and now I'm expecting we're going to have a multi-week correction for intermediate 4. Given the guideline of alternation that can tell us what to expect for intermediate 4, intermediate 2 was a very deep double zigzag, and so we know what is least likely for intermediate 4. It's least likely to be a single or multiple zigzag. It's most likely to be shallow. So it's most likely to be a shallow flat combination or triangle. Those are all sideways time-consuming structures. Intermediate 2 lasted 17 weeks, and so I'll be looking for intermediate 4 to possibly last a Fibonacci 13 weeks at the first expectation. If we get toward the end of 13 weeks and the structure is incomplete, then I'll look for the next Fibonacci number in the sequence, because the duration of waves is fairly often a Fibonacci number, so we'll look out for that, and that would see it reasonably in proportion to intermediate wave 2, and it's the proportion between the second and fourth wave corrections within an impulse that give an impulse what we call the right look. It may find support about the lower edge of the Elliott channel, which is drawn from 1 to 3 and a copy on 2. Intermediate 4 may not move into intermediate wave 1 price territory. Intermediate 1 has its price extreme here at 55.24. No part of the fourth wave at any time may overlap any part of the first wave. That's the rule. And so a choppy overlapping consolidation may be expected to last at least a Fibonacci 13 weeks for the first expectation, so a multi-month consolidation may have begun. Let's take a look at the daily chart with the end of minor 4 down here. There's this point down here. Here's the subdivisions of minor wave 5, an impulse, and the beginning of intermediate wave 4. If I've got this labelling wrong, the degree of labelling here may be 1 degree too high. I may need to move it down 1 degree, considering the duration expected for intermediate 4. If intermediate 4 is going to be a flat combinational triangle, then the first wave within it, for minor wave A, or we could relabel it minor W for a combination, would be most likely to unfold as a three-wave structure, which is most likely to be a zigzag, which is why I've labelled this A, B, C. And at this stage, I wouldn't expect C to be over. I'll be looking for intermediate 4 to possibly end about the 0.382 Fibonacci ratio, and I'm expecting it's going to be a big, choppy, overlapping sideways movement with very big swings within it. This is the alternate wave count, which doesn't have good support from classic analysis because it expects new lows for oil, and that very strong bullish divergence at the monthly chart level from on-balance volume would not make any sense for this wave count. So I do not have confidence in it. But what if? What if I'm wrong? What if we are going to see new lows? It's possible the big zigzag might not be over, subdividing 5, 3, 5. Cycle C, beginning here instead of here, subdividing as an impulse, 1, 2, 3, 4, 5. While primary 4 has not moved into primary 1 price territory, this alternate wave count will remain technically viable. It suffers from a couple of problems. Primary 4 exhibits no alternation with primary 2. They're both deep, they're both single zigzags, and within them the B waves are both triangles. So with the almost complete lack of alternation there, that does reduce the probability of this wave count. Let's take a look at the weekly chart now, where primary 3 low is this point down here. Here's the zigzag of primary 4, A, B, C. This wave count expects we've had a huge trend change and a new big wave down to new lows for primary 5 to move below the end of primary 3 at 26.86 to avoid a truncation. At the daily chart level, let's look at the end of minor 5, where 4 is here. The subdivisions of this final wave up are seen in exactly the same way for both wave counts. I'm seeing it as an impulse, and now instead of ABC, this wave count looks at 1, 2, 3 unfolding downward, all likely within a first wave. Within primary 5, no second wave correction may move beyond its start above 72.90. That's all for me at the end of the trading week with your oil analysis, and I hope that all of our members and viewers are having a most fabulous weekend.